Welcome back to Stock Predictor, the channel where we break down smart investing strategies in a simple, clear, and practical way. In today's video, we're talking about one of the most powerful wealth-building tools that almost every successful investor relies on but most beginners completely overlook. I'm talking about ETFs, exchange-traded funds, and today I'm revealing the best ETFs for long-term investors in both the USA and the UK. If you are tired of trying to pick the perfect stock, tired of guessing the market's next move, and ready to build real long-term wealth with less stress, then don't miss a second of this video. Before we dive deep, make sure you hit the like button, subscribe to Stock Predictor, and turn on notifications so you never miss future videos about stocks, ETFs, market trends, and long-term investing strategies. Alright, let's get into it. To start, let's answer one simple question: why ETFs? The answer is simple. ETFs give you instant diversification, low risk compared to individual stocks, low fees compared to mutual funds, and long-term performance that has historically beaten most retail investors who try to time the market. When you buy the right ETF and hold it for years, you get exposure to hundreds or even thousands of companies. One investment, one position, massive diversification, and that is exactly what long-term investing is about: reducing risk and building wealth steadily. Now let's talk about the best ETFs that long-term investors in the USA and UK should seriously consider. These ETFs have strong track records, low fees, and exposure to sectors and regions that are expected to grow for years. Let's begin with what many experts call the single most powerful long-term ETF in the world: VU, the Vanguard S&P 500 ETF. VU tracks the S&P 500 index, which represents the 500 largest companies in the United States. These are the giants: Apple, Microsoft, Amazon, Alphabet, Nvidia, Meta, and so many more. When you invest in VU, you are literally investing in the engine of the global economy. Over long periods, the S&P 500 has averaged around 10% annual returns. No guessing, no stock picking stress, just long-term steady compounding. If you want one ETF to build wealth for the next 10 to 20 years, VU is one of the safest, smartest choices available. Now, if you're watching from the UK, there's a similar version called VUSD, the Vanguard S&P 500 ETF listed in London. It gives you the same exposure to the US market but trades in the UK with the same low-cost structure. Many UK investors use VUSD in their ISA or SIP for long-term tax-efficient growth. Both VU and VUSD are powerful long-term vehicles that require minimal management. Just buy, hold, and let compounding work its magic. Next, let's talk about another incredible long-term ETF, QQQ. This is the Invesco NASDA Q100 ETF, and it focuses on tech-heavy giants: Apple, Nvidia, Amazon, Microsoft, Meta, Tesla, and many more innovative companies shaping the future. If you believe the future is digital, automated, AI-driven, and powered by technology, then QQQ is a must-consider ETF for long-term growth. QQQ has historically outperformed the S&P 500 over the last decade because tech has grown at an unbelievable pace. Of course, QQQ comes with slightly higher volatility, but for long-term investors who don't panic at short-term dips, QQQ can be a game-changer for wealth creation. For my UK viewers, the equivalent is EQQQ, which is also listed in London. It tracks the same NASDAQ 100 index and offers the same long-term exposure to large-cap tech innovators. Many UK investors combine VUSD and EQQQ for a balanced growth-focused ETF portfolio. Now, let's talk about something every long-term investor should have: international diversification. It's easy to focus only on US stocks because they dominate global markets, but there is huge potential outside the US as well. And that's where the Vanguard Total World Stock ETF, VT, comes in. This ETF gives you exposure to more than 9,000 companies across the globe. Yes, 9,000. That includes the US, Europe, Asia, emerging markets, every major region. VT is like owning a piece of the entire global economy. Over the long term, this kind of diversification can reduce risk and protect you from downturns in any single country. If the US slows down, Europe might grow. If Europe slows down, emerging markets like India or Southeast Asia might boom. For UK investors, the equivalent is VWRL, a global all-world ETF that gives broad exposure to global markets. If you want one ETF that covers everything, VWRL is one of the most popular and trusted options in the UK market. Now, let's explore something many smart investors are adding to their long-term portfolio, an ETF focused on dividends. Dividends are a powerful long-term wealth builder because they provide passive income while also offering protection during market downturns. One of the best long-term dividend ETFs in the USA is SCHD, the Schwab US Dividend Equity ETF. SCHD focuses on high-quality, financially strong companies with a consistent history of paying dividends. These include companies like PepsiCo, Coca-Cola, Texas Instruments, and Home Depot. SCHD has a strong track record of stability, great yield, and long-term outperformance compared to many dividend ETFs. For UK investors, the counterpart is VHYL, the Vanguard FTSE High Dividend Yield ETF. It tracks high-dividend stocks globally and is a great way to add income-producing assets to your long-term portfolio. Many UK investors use VHYL inside their ISA for steady long-term dividend growth. Now let's talk about a sector that is booming and expected to grow massively over the next decade: technology and innovation. For investors who want exposure to future-focused industries such as AI, robotics, cloud computing, cybersecurity, and genomics, the ETF called ARKK, the ARK Innovation ETF, is extremely popular. ARKK is managed by ARK Invest and focuses on disruptive innovation. It's more volatile, yes, but if you believe in the future of AI, automation, renewable tech, and biotech, ARKK can be a powerful growth engine in the long run. For UK investors, a similar option is EQQQ or certain UCITS-compliant innovation ETFs available in Europe. These ETFs help capture the long-term growth of next-generation technologies expected to transform our economy. Now let's cover an often overlooked area: bonds. While stocks deliver high returns, bonds provide stability, especially during market crashes. For long-term investors in the USA, BND, the Vanguard Total Bond Market ETF, is one of the most trusted bond ETFs. It offers broad exposure to U.S. government and corporate bonds. Having a portion of your portfolio in bonds can reduce risk without hurting long-term performance. For the UK, the equivalent is VAGP, the Vanguard Global Aggregate Bond ETF. It gives exposure to thousands of bonds worldwide and helps stabilize long-term portfolios, especially for conservative investors. Now that we've covered the best ETFs for USA and UK long-term investors, let's discuss how to build a simple but powerful ETF portfolio. You don't need 10 different ETFs. You don't need to constantly rebalance. A strong long-term ETF portfolio can be built using just 2 to 4 ETFs. For example, a simple long-term portfolio for US investors could be 70% VU, 20% QQQ, and 10% BND. This portfolio has strong growth, diversification, and stability. Another option is 100% VT, the global ETF, for investors who want global exposure without complication. For UK investors, a simple long-term portfolio could be 70% VUSD, 20% EQQQ, and 10% VAGP. Or a single ETF solution like VWRL if you want everything in one investment. Now you might be thinking, how much money do you need to start? The truth is, you don't need thousands of dollars. Many brokers allow you to buy fractional shares. Even investing $10 or £10 a week into one of these ETFs can grow massively over years. It's not about timing the market. It's about time in the market. The earlier you start, the more compounding works in your favor. Let's talk about compounding. Compounding is often called the eighth wonder of the world. It's the reason long-term investors consistently outperform traders. When you reinvest dividends and stay invested through market ups and downs, your wealth starts to grow exponentially. ETFs like VU, VUSD, VT, VWRL, SCHD, and VHYL are designed to make compounding work for you automatically. They grow steadily, pay dividends, reinvest gains, and capture global economic growth. But here is something most people don't realize: your behavior matters more than the ETF you choose. Long-term investing only works if you stay consistent. You cannot panic sell every time the market dips. You cannot jump in and out based on short-term news. You cannot chase the next hype stock every week. Wealth is built slowly and steadily through discipline, patience, and long-term commitment. That is why ETFs are so powerful. They take the emotion out of investing. Now, let's talk about risk. Even though ETFs are safer than individual stocks, they still carry market risk. The value of your investment can go up and down. But historically, long-term investors who stay invested for 10 years or more almost always end up profitable, especially with large-cap ETFs like VU and QQQ. Long-term investing gives you time to recover from market crashes and benefit from future growth. Another important thing to consider is fees. One reason ETFs outperform mutual funds is because ETFs have extremely low fees. For example, VU has an expense ratio of just 0.03%. That means for every $10,000 invested, you pay only $3 per year. Compare that with many mutual funds that charge 1% or more, and you can clearly see the long-term difference. Now, to help you choose the right ETF, here are a few simple guidelines. If you want stability and broad exposure, choose VU or VUSD. If you want high growth and don't mind some volatility, choose QQQ or EQQQ. If you want global exposure, choose VT or VWRL. If you want income and stability, choose SCHD or VHYL. If you want exposure to future technology, use ARKK carefully as a small portion of your portfolio. If you want safety and balance, add a bond ETF like BND or VAGP. Now, many investors ask, should I dollar cost average or invest a lump sum? Dollar cost averaging is one of the best strategies for long-term investors. It simply means investing a fixed amount regularly, weekly, monthly, or quarterly, regardless of whether the market is up or down. This removes emotion, reduces risk, and builds wealth consistently. It also allows you to benefit from buying more shares when prices are low. If you receive a bonus or have extra money, lump sum investing can also be powerful because historically the market goes up more than it goes down. But dollar cost averaging is easier and more stable for most people. Now, let's talk about taxes quickly. In the USA, ETFs are tax efficient because they minimize capital gains compared to mutual funds. In the UK, many ETFs qualify for ISA or SIPP accounts, meaning you can grow your money tax-free or tax-deferred. VWRL, VUSD, and EQQQ were extremely popular inside UK tax-advantaged accounts. Before we wrap up, here's one final, but important point. Long-term investing is not about finding the perfect ETF. It's about buying good ETFs, staying consistent, reinvesting dividends, and giving your portfolio time to grow. Even if you choose just one ETF from today's video and stick with it for 10 to 20 years, your future financial self will thank you. To summarize the best long-term ETFs we discussed today: VU for USA investors and VUSD for UK investors. QQQ for tech growth and EQQQ for UK investors. VT for global exposure and VWRL for UK global investors. SCHD for dividend growth and VHYL for UK dividend investors. BN for US bond exposure and VAGP for global bond exposure. And high growth innovation ETFs like ARKK for those seeking future-focused opportunities, used wisely as a smaller portion of your portfolio. These ETFs have strong long-term track records, low fees, and exposure to global growth trends. They are tools that can help you build wealth, reduce stress, and stay invested with confidence. If you found this video helpful, make sure to hit like, subscribe to Stock Predictor, and drop a comment telling me which ETF you want me to review next. Also let me know if you want me to make a full breakdown portfolio video for USA and UK investors. Thank you for watching, and remember, long-term investing is simple, smart, and powerful when you choose the right ETFs and stay consistent. I'll see you in the next video.